And it's July 20th, right here in Lagos, Nigeria. Good morning, good evening, in whatever time zone you are in the world. You're watching Business Morning live from Channels HQ, right here in Lagos. Well, even though PMS prices are weighing on us right now, we do need to stay positive, at this time. Consumer disposable income stretched from all sides, but let's take a look at what's happening right now in the world of business. We see the Lagos Chamber of Commerce and Industries asked the central bank to remove the foreign exchange restrictions for importing 43 products in its list. A statement released by the president of the LCCI, Michael Olawale-Cole, on the economy, the chamber explained that this is critical to enhancing stability, liquidity, and transparency in the FX market. Mr. Olawale-Cole also recommended that the CBN should communicate the new framework for exchange rate management and exchange the consistency of the current framework for monetary policy operations to ensure price stability. Nigeria's oil exploration rig count improved by 27.3% year-on-year on 14th of June in 2023 from 11 recorded in the comparative period of 2022. According to the monthly oil market report for July, released by the Organization of Petroleum Exporting Countries, OPEC, the index, which measures activities in the upstream sector of the petroleum industry, also went up by 7.7% month-on-month from 13 rigs recorded in May. Although OPEC did not specify the factors behind the improved rig count, oil experts attributed to the Petroleum Industry Act as the PIA, comprehensive legislation which has encouraged stakeholders, including investors and financiers, to inject more resources into the sector. And to the global oil market, now oil prices little change today as a lower than expected drop in U.S. crude inventories and a potentially weaker demand outlook kept investors cautious. September Brent futures climbed by 6 cents to $79.52 a barrel, while the August U.S. WTI crude, that gained 5 cents to $75.40 a barrel. The August WTI contract expires today. September WTI crude was higher. We saw it there by 6 cents. Still a lot of volatility in the market. We'll check out what's driving prices later on the show. And right here, Amadeb Energy Services Limited has become the first oil marketer to take advantage of the deregulated downstream oil sector, bringing in 27 million liters of PMS for local consumption. The vessel, St. Nene, which berthed at Amadeb Jetty in Ijegun, Lagos, is set to cost about $17 million. Speaking during a brief ceremony in Lagos to unveil the products, the chief executive officer of the company, Mr. Debo Olujimi, appealed to the federal government to find a special window for sourcing of FX for petroleum products. Take a listen.
Early in the week, feelers were rife concerning a PMS cargo destined for the Lagos waters. And what's interesting is it's not governments, but a private entity. So we followed up. The vessel berthed here at the Ijegun waters, and immediately men went to work to begin the discharge process. "24 hours later, industry stakeholders began converging for a milestone event. 20,000 metric tons of PMS, equivalent of 27 million liters, is the first PMS vessel to arrive Nigeria post-subsidy removal, courtesy of Amadeb Oil Services.
For this cargo here, it cost almost about $70 million. And at $17 million today, it's not where you can go into the I&E market to find where you're going to buy the money.
It's official. Anyone with the capacity and financial muscle can join the business in bringing in petrol, which will in turn increase the number of marketers and perhaps impact pricing.
When we talk about deregulation, people just think about increase in price. Actually, it is not. It is opening up the space so that there will be more participation. Today we have bankers here, we have suppliers. It wasn't so a week ago.
With deregulation, supply and distribution isn't so much of worry. FX and local refining capacity is.
We call on the government if government can help in actually finding a window where this issue of dollars are resolved and we can have a fixed market rate to bring in this and access this without any condition, without just for the PMS. Then it will go a long way to ease the sufferings of Nigerians. I think that's actually the way forward.
From the financiers to the suppliers and the unions, everyone has got some kind words for the feat achieved here.
It's very instructive to see that the first cargo of PMS that was brought into the country under the new policy regime from the federal government was actually financed by Polaris Bank. Emade passes the bill on all fronts and will continue to look forward to working with more partners.
As generously spoken and anticipated, more entities will and should join the Emade Group in helping realize the full potentials of a deregulated downstream petroleum sector.
All right, now to our first conversation. So much has happened in the Nigerian economy in the past week, and according to the latest data from the Central Bank of Nigeria, money supply increased about 64.3 trillion in the month of June 2023, the highest ever recorded in Nigeria. This compares to about 55.5 trillion recorded in the month of May, making it about 8.8 trillion naira higher. To discuss the expected impact and how we got here, joining me is Mr. Johnson Chukwu, CEO, MD/CEO, Cowrie Asset Management. Great to have you on the show. Good morning. Good morning. I think you might have to unmute there.
My apologies.
All right, fantastic. Yeah, I can hear you. I can hear you better now. Good morning, Mr. Chukwu. Thank you so much for joining us. So we see quite a big jump in the money supply in the Nigerian economy. That's a big 8 trillion naira from May. What do you think drove this jump? Are we printing too much naira?
Are you there?
Okay, fantastic. I can hear you now. Yes, I can hear you.
Okay, can you come up with the question again?
Yeah, so I said big jump, for the money supply we saw in June. That's 8 trillion more from May. What do you think, drove this jump? I'm wondering, are we printing too much naira?
No, not really. The jump is what I may call an internal adjustment. And basic thing that has happened is that the central bank has begun to adjust downwards the cash reserve ratio of banks, and then freeing up liquidity for the banks. And that increased, partly contributed to the increase in money supply we are seeing now. In addition to that, remember that the federal government has done two things. They've deregulated the downstream oil and gas sector, and they have also harmonized the exchange rate. The harmonization of the exchange rate means that conversion of all foreign exchange earnings from crude will be converted at higher naira value. So that also has direct impact in terms of system liquidity. So two major factors that accounted for this are, one, the adjustment in cash reserve ratio. And even the central bank has said that for merchant banks, their cash reserve ratio will be adjusted from 32.5% to 10%. For the commercial banks, the cash basis for computing the cash reserve became very opaque. And what has happened is that the central bank has now adjusted and freed up a lot of those amounts that were sterilized, which came back into the same liquidity. So those are the two factors that drove it, not because central bank went about printing more money. Of course, I'm not sure we have the figures for any ways and means funding that may have happened in the month of June, but I doubt if that will be very material to us to contribute to the kind of liquidity improvement that we're talking of.
And for a while now, since global inflation was spiking, we've seen, experts accuse, central bankers of printing too much money for stimulus, when we had COVID-19, and that's why we're seeing so much inflation, right now. But looking at this jump from May, what is the expected impact of this? And must this kind of money supply, must it stoke inflation?
Well, ideally, an increase in money supply will stoke inflation if that money gets into the hands of consumers. But as it stands today, the excess money supply is just within the banking system. the impact of having that liquidity with the banking system in the banks will reduce their interest rate on deposit because they have surplus funds. They're not really going to go out there begging people to bring in money. So in terms of buying money from the public, the banks are the market makers. The bank, what they call the market power now resides with the banks. They are in a position to negotiate downwards interest rate, which is what will happen because with the level of liquidity they have, they are not likely going to go bullish with risk asset creation. So they have a kind of liquidity suffix that they will not just give out. So they won't have any need to pay you premium to have your deposits. So the banks are going to reprice downwards their deposit rates. That is what I think will happen. The impact is going to happen. But then in terms of lending, it should also give borrowers the opportunity to negotiate downwards their loan rates, particularly triple-rated borrowers, because the people with weak credit will normally pay huge risk premium to borrow. But the companies and individuals with strong credit standing will be able to negotiate lower loan rates from the banks. But what you are going to see is that lower deposit rates, possibly lower borrowing rate for those blue chip companies and the HNIs, high net worth individuals. And then we'll also see, because of lower deposit rates, we're already seeing a lot of investment going into the equity market. So you are going to see more of that because when people can't get good yield or good return on their fixed income instruments, the option they have is to go into equity instruments. I think that's what we should expect from the economy in the next couple of weeks.
With a jump like what we see from May into June, is it necessary to mop up at this time, excess liquidity? Is that the right move right now? And are there other ways to mop up without, raising rates?
Well, I don't think there's any need for the mop up. Like I said, the liquidity we have today is not in the hands of consumers. It didn't come about as a lot of credit creation where the banks are granting overdrafts, and when a bank grants overdraft, they actually create money. It's not coming from that. We're not seeing expansion in credits. So it's not going to impact on consumer demand. And the reason why central banks mop up liquidity is to moderate consumer demand. Today, the consumers are actually stifled. We've seen jokes around that consumers say they can't breathe, allow the consumers to breathe, because they don't have disposable income. There's no improvement in average consumer disposable income. So what we rather see is that in the vaults of the banks, you have higher balances, higher credit balances with the central bank, higher balances in all their investments in short-term instruments, money market instruments. That's what you're going to see. But so there's no compelling need for the central bank to do a mop-up, because that mop-up will simply means we have seen so much credit going into the hands of the consumers, and then we need to tighten the interest rate so that people will stop borrowing more and stop consuming. We don't have that situation. The reverse is rather the case. Consumers are even looking for headroom to even buy basic necessities of life. I don't think there's a compelling need for a mop-up.
And definitely with consumers squeezed at this time, what are you seeing for the second half of 2023? How do you think this is going to impact businesses going into the second half? Because right now, consumers are trying to breathe, as you said.
Yes, I think what we should expect is that the conditions of consumers will remain largely about the same for the next couple of months. There's not going to be any structural change in the economy in the next couple of months. In terms of fresh income, new income, maybe when the government increase the salaries of workers, and then you're going to see a new source of cash flow coming into the pockets of consumers, and that will lead to an improvement in demand. But as it stands today, we should see a slowdown in demand, we should see a slowdown in production, and then we should see a slowdown in employment. So you're going to see a high level of unemployment, a lower level of consumption, and ultimately a reduction in GDP growth rate.
Yeah, and we're going to have the first MPC meeting for the Tinubu administration. What do you think the CBN MPC will do at the next meeting with inflation now at 22.79%, Naira volatility, and, since the money supply growth is not a problem, what are they going to do at the next meeting with all of this? Do you expect a pause, a hike, or maybe a cut?
I think we're going to see a pause. They will likely going to keep rates at current levels. A couple of factors have to come into consideration in what they will do, based on my thoughts. One of which is that the inflationary pressure we're witnessing today is not driven by credit expansion or consumption. So you're not going to manage it by tightening rates so as to make cost of borrowing higher. And again, we don't even have consumer credits in the country, unlike where you have in other countries. That the consumer credit is the most effective transmission channel for monetary policies. We don't have that. The other factors you have to look at that the central banks seem to have been decapitated. So you're going to see a monetary policy committee that might not be as independent as they used to be. And they're likely going to toe the language or the lines of the executive. We know what the president said. They want to encourage private sector investments, and they want to review monetary policies. And if you say you want to review the monetary policies have been very contractionary in the past couple of months. So a review of it simply means you are saying the opposite of what they were doing, which is doing an expansionary monetary policy. But I don't think the current environment, given the pressure you have on foreign exchange, will allow for an expansionary monetary policy. The most likely thing they will do is to hold rates at current levels.
And how do you see this impacting the capital markets in Nigeria going into the second half of 2023?
Yes, like I said earlier, what basically investors do is that if fixed income yields are high, they will underweight their portfolios in equities and overweight them in fixed income. Like what we're witnessing today, I said, with a lot of liquidity we're going to have, or that we're likely going to continue to have in the next couple of months, interest rates are going to go down further below where they are today. And the investors will look at, if instead of getting a yield of maybe 6-7%, on my fixed income instrument. I know most deposit-taking institutions have dropped their rates drastically, and that will even worsen in the next couple of months because the level of FAC allocation we should expect in the coming months are going to be almost twice what it used to be, or even more than that. So that will go still back into the banking system. So rates are going to come down, and discerning investors will obviously look for alternative asset classes to invest, which is equity in the Nigeria situation. So I should expect a lot more votes, Naira votes will go into the equity market in an environment where interest rates on fixed income instruments are going to remain low.
All right, Mr. Chukwu, investors are trying to, beat inflation at this time, trying to beat currency devaluation. A lot, the average investor has to deal with, right now. What do you think is the best strategy for the average investor, at this time to be able to make good returns, in the second half?
Well, you already pointed in that direction. The key thing is that if you have any foreign currency income, the appropriate thing is to invest in foreign currency assets. If you have access to foreign currency positions, you can invest in mutual funds, dollar-denominated mutual fund, dollar notes, to insure yourself against further Naira devaluation. But in the absence of having foreign currency and having access to foreign currencies, you are left with local Naira assets only. And in that wise, the equity market is a way you can actually go to see if you can possibly outperform the inflationary rates or depreciation. There are some stocks that have gained more than 50% in the past couple of weeks, but you must focus on stocks with strong fundamentals. But it depends on the level of resources you have. It depends on the kind of risk you're ready to take. It depends on your holding period. So all these factors will have to come into play in deciding what you want to do. We always say, look, seeking for advice, investment advice is like going to a doctor and saying, look, I need a medical diagnosis. If you go to a doctor with any ailment, the first thing they will do, they want to carry out a test. We do such head tests when we want to advise customers. We look at your age, we look at your income, we look at your cash flow, we look at your risk appetite, we look at your holding time threshold, and then we'll advise you on what asset class you are going to go into that will make reasonable return at minimal risk.
Definitely not easy holding through so much volatility right now in the investment space. But thank you so much, Mr. Johnson Chukwu, MDC Okari Asset Management. It was great having your perspective today. Thank you. All right, after the break, we'll see how the recent jump in PMS prices, how's that going to affect domestic commodities? That's our next conversation. Do stay with us. Welcome back. So watching Business Morning live on Channel Television. To our next conversation now. This week, we've seen the pump price of PMS adjusted between 580 to about 617 naira per litre in Lagos. Well, how's that going to impact the commodities market? Joining me now is Bolanle Agbaje, Senior Analyst, Financial Derivatives Company.
Hi, good morning.
Good morning. Great to have you. Last time we spoke,
Yes.
that was Tuesday. Why do I feel like PMS was about 400? Right?
Yes,
It was, right?
Yes. Well, I did mention
Yeah.
that obviously we're going to get the price increases sooner than later because the import duty is now reflective of the new exchange rates that we're seeing in the market. And obviously that has added to the cost of importing this particular product, the landing cost, cost of storage, and many other, costs that do affect the total cost of producing this particular product. And obviously, marketers have explained that it is reflective of market realities. And it's just what is expected when you deregulate a market. It's just going to go up sometimes when, oil prices are higher, when cost of importing this particular product is higher. And then times when oil prices does go down, obviously, we would expect that to feed into the pump price of petrol.
Yeah, because I remember a story I saw on social media. Some consumer was buying fuel, and immediately the news broke. He said the light went off at the filling station. And when the light came back on, the price, had changed. It almost seems like a miracle at this point.
Well, it's definitely not a miracle, but that's just what has to happen. Although I can understand that it's abrupt.
It's quite frustrating.
Yes, for, the consumers. But all in all, I guess because this is a new phenomenon. We removed subsidies on the 29th of May, or that was when it was, announced by the president. And obviously, a lot of marketers are just adjusting to what this new reality is. For the longest time, we had subsidies, and I guess this new wave of this deregulated market to take some time to adjust to. And I'm sure going forward, by the time they need to increase prices or reduce prices, it wouldn't be as abrupt. It would more or less be the new normal for consumers.
Because it almost seems like it's hard to see an abrupt drop in price.
Yeah.
But there's always a lag, when the prices drop. But when the prices are rising, there's no lag.
Yeah, but I guess that speaks to us as individuals. Nobody wants
profiteering?
to... Yes,
it's profiteering.
Exactly. And we're in a capitalist society. It's obviously going to be profit-driven anyways. So I guess that's why you see that lag when it comes to price, decline. And I'm sure even the prices, when prices does go down, it wouldn't go down as much as, the percentage that it goes up with. So, but it's just the new reality of, Nigerians at the moment. Although we have to understand that prices of petrol in Nigeria is still much lower than what it is in Africa. But I know obviously when you have this high price of petrol in combination with high inflation rates, high exchange rates, it would obviously be a lot to swallow for most consumers. And obviously living standards would definitely decline significantly. Poverty rates would go up, like the World Bank mentioned. Although they did mention the fact that it's time for the government to come in, give palliatives, look for ways to ease the stress of the lower end of the consumers.
And it's quite interesting that prices of fuel we see compared to other countries, we're seeing it's much higher in those countries. But we see Egypt and Angola cheaper than Nigeria.
Well, Angola is obviously, I guess we're still the number one producer, but Angola is right behind us and sometimes takes over the number one position from us. But, Angola is probably refining most of the fuel that they produce or the oil that they produce. So obviously the cost in Angola would be much lower than what it is in Nigeria because when we talk about the refineries that we have, everybody is so, focused on Dangote refinery at the moment, but it's not all that we need. Dangote can only supply so much. We also need other refineries to support and obviously meet the demand within Nigeria. So because we're lacking that at the moment, that's why we're seeing these oil prices, and we have to rely more on imported fuel. But all in all, what this means is that individuals, companies, manufacturers, all of that, they would need to look for ways to adjust to the new normal, look for ways that they can incorporate the cost and, look for technologically, just innovative ways to make sure that the cost doesn't really drag down their business. So whether it means hybrid working or fully remote, working, and I'm sure most individuals now are probably not filling their tanks and trying to figure out, is it necessary for me to actually go out today? Can I be more productive at home and still make the same amount of money, or if not more? Because obviously the stress of going outside, entering the traffic is eased out, and you don't feel that, and so you can actually be more productive towards your work. And also, I don't know if you've noticed as well, the fact that traffic has actually eased significantly.
Yes.
So
it has.
If you're looking at the bright side, just to keep you happy in the moment, but we do know that in the medium to long term, the prices will definitely regulate. The marketers have mentioned that in the association. I think they mentioned that yesterday or day before yesterday. And they did say that, obviously, right now, everyone is just trying to find the balance. Oil prices are still relatively high. They still traded at about $80 per barrel at the beginning of today. I think it's come down to about $79 per barrel. And so you're obviously going to feel that impact in the economy, as well as, the world economy
with the
as well.
Rising cost of transportation, now we're seeing
yes.
Trekking, more of a trend now.
I think looking at the bright side, people will become fitter and stronger. But I know it's not nice, because obviously you don't get to work as quick as you expect to. But like I mentioned, it means that companies will have to go back to the drawing board and look for ways to make their employees more productive.
Because when we talk about palliatives now, everyone's looking at the federal government. At this point, shouldn't we be looking at the state government? The big companies, right now for palliatives.
You have some states that would, generate their income themselves and look for ways that they can actually make this better for the individuals within that particular state. But, all of that still comes from the leader. And, the direction has to come from them, and looking for the right strategy to share whatever that, most countries have given to more or less ease out the pain that Nigerians are going through at the moment. And I'm sure it seems like that's what the president is doing right now. He hasn't really said much about how they would, share this. But I think the right thing would be, like in most countries, for example, whenever they want to share grants and all of that, it's sent directly to bank accounts. But I guess in Nigeria, we don't have the technology to do that at the moment. But I guess it's something that they can possibly look into, and measure the fact that the lower end of the population gets more than the higher end.
Because it looks like the government needs to get really creative.
They need to get creative about making sure that
getting palliatives out there.
Especially the lower end of the population.
Because you hear palliatives, but it doesn't get to the targeted people. But let's look at oil prices up this morning. Definitely, I believe we want to be seeing lower oil prices.
It's sad, because we're one of the top oil producers in Africa. So higher oil prices is beneficial for us. So it's kind of like an opportunity
PMS.
cost. But I think I will take the higher oil prices, because all in all, the money can actually be channeled towards, easing out our stress within the country and developing our productivity within the country, as opposed to, having lower oil prices so we can have, that is just the short term, when you're looking at increasing oil prices and increasing the funds that Nigeria actually gets, is looking at the medium to longer term, solutions.
All right, let's look at the global grain market now. Still, Russia's pulled out.
Yes, Russia's completely pulled out.
And
not what we expected.
Wheat prices
are definitely going to go up. Bread, the price of bread, coming back to the regular consumer, the price of bread is going to definitely go up. I guess most consumers will just look for alternatives to what they eat in the morning. But Russia, I think all of this just speaks to not being too reliant on, the global space or importing of some of these particular products. We can actually produce our own wheat within the country and increase the quality so that it can match the tastes of most Nigerians. I guess that's where we have to look forward to, because there's nothing we can do about what Russia is doing at the moment. They seem to try to, I think what they're trying to do now is escalate, this particular war between Ukraine, and it's just our hands are tied. There's nothing we can do about that. All we get from that is the higher prices of wheat, and that obviously is bad for our economy. So looking for innovative ways to actually increase our own production, because I think we do produce, a small amount, but increasing that production, like I mentioned, so that's where the increasing revenue from oil would actually, be beneficial towards. So obviously, medium to long term, we're on the receiving side for now, and it's not necessarily good for our import bill, and that's just our reality.
It almost seems like consumers are running out of options at this point.
Yes, and we just have to face it.
All right, let's look at the price of natural gas. So Europe is having it good, with energy prices at this time, even though we're seeing the opposite, in these parts.
Well, inventory levels have, significantly risen compared to what it was last year. I guess last year most countries were still trying to build up supply, and so we had seen that huge glut of demand, and that had affected prices. But right now, it seems like inventory build, because during this time, most of the time, the European countries are more or less trying to build up inventory ahead of the winter. But we're not seeing that. Prices are actually declining at the moment because inventory levels are almost at its peak. So that's good for the receiving countries. But those that do produce LNG, is not necessarily great for their books.
All right, what's happening with the Naira now? So it's
appreciated in the I&E window, but depreciated in the parliament.
And it seems that we're seeing a gap building gradually.
It would, I think, for now, what we're going to be seeing, because it's obviously regulated, but it's market determined now. So you would get, the push and pull, but ultimately at some point there will be full convergence, or we hope that we'll get to the point where there's actually full convergence.
Right, definitely hoping for that. What's happening with domestic commodity prices?
Still relatively high. The likes of tomatoes are currently at about 90,000. It's huge. Like I don't see people buying tomatoes as much as they used to. 90,000 naira for a basket of tomatoes, and I'm sure you're not even going to be getting high quality tomatoes in that basket. Obviously, the price of pepper as well, 65,000 naira, is huge. Grains, gari, beans, also in the ranges of the 30,000. And
how can I make stew without tomatoes? What's the alternative?
I guess with the kind of taste that Nigerians have, I don't think there's any alternative per se.
Right.
But I guess you'll just reduce the pot of stew that you're making.
And tomato paste, is that going up?
Well, obviously, tomato paste is like a final product.
Right. So that's going to be expensive too.
Yes.
Wow. How do I make my stew now? Quite incredible times. All right, thank you so much, Bolanle Egbaje. Always great having your perspective.
Thank you for having me.
Senior analyst, financial derivatives company. Thank you so much. All right, there we have it. Prices still running at this point. Definitely hoping that prices are going to start coming down at some point, and definitely all eyes on the central bank MPC first meeting for this administration. That's coming next week, and we're going to cover that right here live on Channels Television. We'll take a quick break now. When we come back, the markets, we'll take a look at how the markets are looking, the domestic bourse and the fixed income market. That's in a moment. Do stay with us.
As we make sense of it all, with in-depth coverage and analysis from across the globe. The World Today, every weekday at 5:30 p.m. It's a sign of the times. A reflection of conversations from the streets to the halls.
Interesting collection you have here. Thank you.
That get to the walls. If they could talk, see and hear the limitless creative.
So I think the moral of it is that when you make a vow, you must ensure that you fulfill it.
On Art House,
let's jump right into the markets now. Yeah, yesterday we got that minor pullback, call it a blip. We have Will with the details now.
Yeah, Ladi,
that's a blip, right?
Yeah, that was just a blip. Profit taking. As you mentioned in the morning that, profit taking might take place, seeing that we had 2 positive sessions, 2 days of positive trading in the market. And so we've seen that negative pullback, that negative trend is not a surprise for the market. It's well anticipated by many analysts, many market players.
Just little profit taking.
Just a little profit taking.
Nothing
just,
you see there.
Nothing serious. And then you did mention that how can you make stew without tomatoes?
Exactly.
Yes. So you just think about just think about you can trade this equities market without money.
Right.
Yeah.
Or maybe just use your stock as stew.
As stew. that could work. That could work.
Right?
Yes. Exactly. So we did see this negative pullback yesterday after having 2 days of positive trade in the market. The market closed bearish, sentiment dropping marginally by 0.01% to settle at 63,757 points. Market cap still at the 34 trillion naira. We saw losses in Giregu, Zenith Bank, Access Holdings, FBNOs, and Honeywell Flour did pull up the market. Yes, the gains in Honeywell Flour did not do well to outweigh the losses we had in MTN Nigeria now. So as a result, we saw that marginal pullback in the market. So downward movement for the market, and we saw the market value diminishing by about 5.17 billion naira. Now, year-to-date return experienced minor decline as well. It's adjusted to 24.4%. Now, look at the market activity yesterday. We did see that 45.5% drop for volume traded to settle at 473 million units, valued at 10.08 billion naira, and all transacted in 7,403 deals. A sea of red for the activity chart there. Let's look at the bank in the trading, the sectors, and see how they traded. Banking was down 2.05%. Consumer goods also in the positive territory because of gains in Honeywell Flour. Honeywell Flour was on full beat yesterday. It's appreciated by 10%. Industrial goods down 0.06%. USDC insurance up, and oil and gas was also in the green. Now, we're going to be talking about the market sentiment, where, however, in negative territory, we did see more stocks losing yesterday compared to what we had on Tuesday. Now, we're bringing in Oladipupo Tijani, is the head Norenberger Advisory Limited, to come and give us the insights in the market. Good morning, Oladipupo. It's good to have you on the program. Can you hear me, Oladipupo? Can you unmute your mic, Oladipupo? Okay, so we did talk about, let's look at the trades, the top trades yesterday while we wait for Oladipupo to join us. Now, Japan Gold was the most traded stock yesterday. 77.98 million units of its shares were traded yesterday. FCMB is still in the top trades counter with 36.62 million units traded yesterday. And we have Sterling Bank, 31.24 million units. Now, let's see what happened in the markets for the NASD unlisted market. We did see that pullback 0.22%. That's 2 sessions in a row. It pulled back on Monday, 0.13%. Now we see that negative pullback yesterday, 0.22%, to settle at 780.09 basis points. Now 1.0, the market cap is now at 1.08 trillion naira. That's still a good one for the unlisted market. We're seeing that positive sentiments trickling into the unlisted equities market. Investors are spreading their portfolio. Now we're having foreign investors coming to the country. We will be seeing a lot of penny stocks that have been trading below the market value, trading below 5 naira, now coming up to, being toast of investors as gains are being recorded in all segments now. So it's not just the big stocks in the market, not just the market giants that are weighing and bringing in the big monies. Now we're seeing market caps, people making gains from small cap stocks, as the penny stocks in the market, if you want to call that. Now, look at the volume and value yesterday. We see lower volume of trades yesterday. 32,722 units of shares were traded yesterday. Now we see it valued at 2.33 million naira. And we also deals 55 deals in yesterday's trading session. Stocks, the number of stocks that were traded were just 14. That's a big jump from what we usually have. We usually have 4 stocks traded, 5 stocks, but yesterday we did see that number jumping to 14. And we look at the fixed income market, we still see bearish sentiments continuing in that segment. I mean, bullish sentiment because yields still going down, especially with the high liquidity in the system. That liquidity jumped to about 540 billion naira. Markets opened in that segment for the money market. So we've seen that much money in the system, and so it's expected that yields will keep trending lower because investors just want to trade and get whatever profits they can make from the monies instead of just letting it sit in the banks and without any gains at all. So we're just going to be seeing that movement in the market is expected for the markets. Now, I heard we have Oladipupo Tijani, head Norenberger Advisory Partners, back with us on the program to give us his insights as to what happened yesterday. Good morning, Tijani. It's good to have you.
All right, good morning, Will. Pleased to be with you again.
So Tijani, we were just talking about markets and how different stocks are being, that used to be undervalued in the markets, coming up now being, the toast of investors. But we did see Honeywell Flour on full bid yesterday after the Federal High Court in Lagos ordered Ecobank Nigeria to pay the company, Honeywell Flour Mills, 72.2 billion naira in damages. The stock price appreciated by 10%. So we did see that demand. Well, I want to know, now that Ecobank has announced that it's going to appeal that judgment, are we going to see Honeywell back on full offer?
Oh, well, quite a number of factors to consider, like you rightly alluded to. Ecobank has said it's going to appeal that judgment. Of course, Ecobank is of the opinion that the ex parte order were actually discharged on points of law and not being frivolously obtained by the bank itself. And then, of course, that's the reason it's going ahead to appeal it. On the back of investors' reaction to those judgments, there hasn't been it hasn't been on the negative side. You've seen that EcoBank itself, year high, is done as high as 16.90 kobo. That's about 39 naira upside gain. If you also look at Honeywell as well, there has been the news hasn't been anything negative. Honeywell has done as high as 55% year to date, engine up to 370 kobo as of trading yesterday. So I think the market sentiment, the markets are one. The bullish sentiment is still having significant impacts on both on one end. Then, of course, the market is not in any way having a negative reaction to this news as we look up to have further updates on that judgment.
And so we've been speaking, and I know, remember you mentioned that the current market condition can be likened to the situation we had in 2008. Can you expatiate on that? Tell us what is different or what similarities are very, pertinent.
All right, I'll quickly just even take you from 2005 when the then CBN Governor Soludo did mention that there were excess liquidity in the economy of over 500 billion. You'll also recall how that landmark through the banks' first round of initial public offering when the likes of Zenny and GT came in, and then all other banks followed suit. And then, of course, you also back into history how most of the listed companies
cents, up 5%. Looked like XRP was stuck under 50 cents for the longest time, but now we're seeing a huge move up. Let's look at the top gainers. We see XLM, following there, 24.65%, 17 cents this morning. So also see Hedera Hash Graph, 8.64% up this morning. XRP jumping on the top gainers counter. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Good morning.
Good morning, Lardy. Good morning.
So, Solomon, I remember around 2017, 2018, there was this relationship between XRP and XLM, that stellar there. Whenever XRP went up, XLM would follow. And now we're seeing XLM, it's up about 70% in a week, and it's up 24%. Is it that same relationship we're seeing because of the run we're seeing with XRP?
Yeah, definitely. It's the same relationship. We've had these both assets tracking each other for a while, for about 5 years. So it was a no-brainer where the SRP got the required news from the SEC that they won the case, which they've been battling for like 3-4 years. We actually expected XRP to move, and we also expected XLM to track it or to trail it rightly behind it. So it's something that has been happening for the past 4 or 5 years, and I don't see any reason why that should stop.
So there's no big development with XLM at this point. It's just following its big brother,
Yeah,
XRP.
yes, exactly. They're just using XRP as an indicator to trade XLM.
Quite interesting. Let's look at some other issues now. See the success of ChatGPT. That seems to be giving some rise to a new trend on Telegram bots. Can you enlighten us in this? What's happening with Telegram and those bots on that platform?
Okay, so far, Telegram bots have always existed in the crypto space for like 3 or 4 years now. We've always had lots of Telegram bots. We have some that they make use of for managing and moderating multiple crypto channels and groups, whatever, based on the whole AI stuff. We have started seeing most persons pay attention to Telegram bots used for trading, and most of them have started gaining tokenization. Before now, most of this, and see like Collabland, the token is out and it's doing numbers since late last year. It's doing numbers, and just to date has done over 200%. And we've seen so many others to Unibots doing very well, and we've also seen Lootbots too doing very, very well. So it's fair to say that they've benefited from the tokenization of the crypto space.
And those Telegram bots, do they make good gains at this time?
Yeah, definitely. The Telegram bots are actually very useful for on-chain transactions. Most persons that use these Telegram bots, they can be able to enjoy certain features like swapping of assets and also placing stop loss and sniping and farming and whole lots of other features. But so far, so good. This is still like the first era and the first phase of these Telegram bots. It's only fair to say that what will be coming up in the future from these Telegram bots will be nothing but amazing.
Right, I guess it's all about AI now and trading. Hopefully, AI doesn't take over all of the trading, with the world at some point. But we'll keep watching that segment going forward. Thank you so much, Solomon Amunde, financial market analyst.
Thank you. Thank you.
All right, let's look at the top news. It's now a C1-inch decentralized exchange at 3 cents, down 5.66%. We also see Sweet Token at 71 cents. 3.56%. So we're seeing a couple of losses right now in the market, not double digit, still quite bullish right now, still quite greedy. I'm talking about investors in this market there. And we're seeing the likes of XRP still taking the market up, outperforming the leader in the market, talking about Bitcoin. So all eyes still on XRP. What's XRP going to do next? So that's how the market is looking right now in the crypto space. And that's the program today. Thank you so much for watching. For more, you can visit www.channelstv.com for more updates and follow us on all our social media platforms at Channels TV. From me and the team right here in Lagos, it's bye for now.